Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. And just to give you a heads up what's coming up from me this week, we have tomorrow an education webinar on using pivot points. So using pivot points to identify key intraday support and resistance levels, that will be tomorrow evening, 8 p.m. Sydney time. And then on Thursday, more analysis from me, 8 p.m. Sydney time. So just head over to the webinar page to register your interest. So if everybody could read through the disclaimer before we move along. If you're in our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar. I've given you the link. Edwin, hello to you. Nice to have you back. Right now, I can see your hand up there. I guess you're just saying hello, but if you have a question, anybody has a question can just put it into the webinar chat box or Q&A box. Hi, Renat. All right, so just everybody take the time to read through the disclaimer before we move along. All right, we'll move along. I'm just pausing because I was reading the chat. Some chats coming in. Edwin's been telling me he's been busy the last 3 months. Raina, it may be too late, yes, to get on board right now. The market's moved quite aggressively one way or the other, depending on what the pair is. So you may have to wait for a pullback. That would be my general plan. Most pairs have moved, maybe done their range for the day. So you really probably want to wait for an intraday rally back up in the short term, I think. But we'll have a look. All right, so if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time Forex trader. I've been trading the Forex now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. Through the week, you can connect with us at the website, acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia. And if you want to connect with me personally, just head over to my Linktree page. All my links are there. Just take a note of my handle and head over to Linktree. You better find me. Edwin, you're saying that your ACY chart is saying old version is not up to date. It should update itself on its own, but I'll show you in a moment. I'll try and show you in a moment how to update. Okay. If you want to get access to my chart lights and templates, just contact Nathan.bray. I'll put his details in the chat now. His email is there on screen, but I'll put it in the chat. Edwin, are you using MT4? All right. When I get to the charts, I'll see if I can work out how they update. Usually they just update automatically. But when I get there, I'll talk about it. All right, first up, we'll just head over to the news page and forexfactory.com. I'll just refresh it. So there's lots of news announcements coming out this week, especially from central banks. We've already had the Audjpy rate statement, policy statement. We've had the RBA statement today already. Maybe the market was expecting that from Japan, they may be raising interest rates, but that hasn't come to effect, I don't think. And yen pair has been moving up in the face of that announcement. Aussie's been moving down in the face of interest rates staying as they are, but maybe markets anticipating will be moving down at some point. All right, further into the day, these times are my time, Queensland time. We've got the Canadian CPI inflation data coming out, 10:30 p.m. Then into tomorrow, we have the UK pound CPI year on year, which market will be definitely watching that because we have the interest rate decision from them on Thursday. So that's the inflation data. Expecting a move down from 4 to 3.5. And ECB President Lagarde speaking there tomorrow. And then into Thursday morning, we got the US interest rate decision. All these items here are US interest rate decision and then the press conference. Not expecting any change there. New Zealand GDP QQ coming out at 7:45 Thursday morning. Employment change, 10:30 a.m. in the morning for the Aussie employment rate. Then we got the flash services and manufacturing data coming out on Thursday for the Eurozone, French, German, UK, and the US. And as well, we have US unemployment claims and the UK monetary policy statement interest rate decision. So lots going on over the next few days. So make sure you're at least 24 hours up to date about what's coming out. So at the moment, if you know the big one at the moment is from Canada this evening, UK CPI data, 5 p.m. tomorrow. Okay. Lots of, market's going to be starting to preempt what they think, these central banks are going to be doing over the next few days. All right, let's get to the charts now. Edwin, usually what happens with my charts is if they update when I log in, it updates and then it'll shut down. Or if you shut it down and reopen, it will update for you. So you could try this, even though it says MetaTrader 5. So my version at the moment is here. My build is 14.5, 1st of March 24. All right. So usually if you're out of date, then it usually just downloads it in the background. And then when you close down and reopen, it'll just upgrade. So if it's not doing that, just contact Nathan, shoot him an email. He should be able to get an email back to you just to tell you how you can fix it up if it doesn't automatically fix itself up, okay? All right, let's get into the charts now. Happening on the dollar index here, so we can have a good look about what's happening, pairs to the US dollar. We are formed a higher top, 62% pullback on the weekly chart, forming a higher bottom. So as I've been saying in the last couple of weeks, anticipating after we pull back to 62, we would be moving up. And now we're going to be taking out this high to a new high for this trading year. Okay, so that's my general view at the moment, unless things change. Now we're back below this weekly high here at 104.32. So there is the potential that we just come up to there. Of course, we've got data coming out this week where we could just come up to this area hold and actually change trends. But let's just go with the fact that we're in a weekly uptrend. And if nothing really changes, we're going to continue up from there. And then day chart has been moving up, put in a very minor high bottom here, minor high top, minor high bottom there. So this is the weekly area of resistance that it's going to have to contend with, 104.32. So it's worth understanding what price is doing when we get there. All right, but at the moment, seemingly we got US dollar strength coming as we're heading towards the FOMC interest rate statement. And S&P 500, it's not that far away from its all-time high. Of course, it's moved above what was the all-time high. We are 2, 4, 5, 6, 7, 8, 9, 10 weeks up, one inside week. We may be due a slight corrective measure. And I do want to be buying at the top, near at the highest price ever for the S&P 500. It doesn't seem like a best idea to me. So, back to the weekly here moment. I'd be monitoring really for this to have some form of a weekly pullback. Now, whether or not it does or not, but for me, whether it can pull back, say, to a 62% retracement here, or in between 62, 79% and what was the all-time high there at 48.16, whether or not we can get that far down, I don't know. But just for this to have some kind of correction, like 1 or 2 weeks pullback, and then if it finds support at a price point, then look for the daily chart to turn back up, and then look to be a buyer at a lower level. I think, for me at the moment, this is way too high. All right, but it is, well, it's kind of got two equal highs up here and another higher bottom. So it's still holding its trend, but it'd be nice if it could have some kind of reaction. All right, and if the FOMC statement and then the press conference comes out and it's still very much, we're miles away from seeing an interest rate cut, then we may see a little bit of a softening of the stock market, and then we might get that dip. All right, now Eurodollar has been selling off. So this is the weekly range. Go to the weekly chart. We've had a 62% retracement, moving up from a lower bottom. So it's inverse look at the dollar index. So really, are we forming a lower top here? Opposite of what I was just saying on the dollar index, to move down to a further lower bottom with the weekly downtrend there. That's what I'm anticipating. So we put in a lower top, move below this minor bottom. We've actually moved below here now and move below. I put this line in earlier in the day as I was getting my charts ready for the day. And that's where we came down to yesterday. But of course, we're below it now. Raina, you were asking me, is it too late to get in? Probably from an intraday basis, because if I just dropped down my 50-minute charts, we've not got that much to today's projected low now in the Eurodollar. There's only, it can go down as far as it wants, but if it's going to do a similar range to yesterday, there's only about 13 pips to go. So for me personally, on all these pairs moving down at the moment, I'll be looking at my 4-hour chart, drawing in a fib, keep dragging it down if the price keeps moving down, and waiting. I can do it on the 15-minute chart, waiting for a retracement back up to the 62.79% zone. All right. So if you're not already in, now if this is the bottom of the day, we don't know if it is or it isn't yet. I'd anticipate we've broken below 108.65, which is daily support. That was. Expect that to be resistance now. So any movement back up there, I would be watching 108.65 for sure to be an area to watch, to be resistance. Okay. On the opposite side, the euro yen's been moving up after the eurozone, so the yen bodge statement. Now we're right back up to an area where we failed at. We created this potential double top up here. Then we put in the lower top here. And I've actually got the fib drawn across the actual range. This is a weekly range here rather than the daily range, just so I'm encompassing the whole range. But we're just way back up to, the selling level here. These two highs here. And of course, we could move through, but we're back up to, that's the 23 high. So we're back up to very high levels. To 4-hour, this is how I get that colored area. There's 3 4-hour tops here to the left. And you can see the new 4-hour candles are starting. And we've just had a massive rejection in that area. So sure, we can move higher, but you have to make a decision. Do you think that we're at exceptionally high price levels once more for the euro yen? And, is this a reaction from today, from the bodge, back up to the selling levels? And then are we going to fail up here to move down? I mean, if you think we're going to move through these highs, you really should have been long before now, because you're buying at previous sell levels. So if I wanted to be a buyer, I would need to see some form of retracement, maybe back to this high here, putting in a fib in across the current 4-hour up range and looking for a pullback to the 62% level, maybe 162.53. You've got this high here as well. And, look for the classic fib pullback. And then you get long in this area for the expectation for price to move back up. So I wouldn't be looking to engage to the long side at such high levels. Now, if we're definitely in a sell zone up here, of course, price is in an uptrend though at the moment, but we have just had a very nice 4-hour rejection inverted hammer candle there. So even if we just, have a retracement, say back to this high here, there's room to trade down. If you traded maybe the break of the rejection candle, there's room for this to come down to get your trade at break even. and see whether it wants to move down further. So what side of the market are you on? All right. I'm inclined to think we're at very high levels, but I'm inclined to wait maybe, on the day chart here at the moment, we're very aggressive. I'd be inclined to maybe wait for a little bit more of a turnover. It's on the 50-minute chart. I mean, if we were to break on the 50-minute chart here, these two 50-minute lows, which would be the break of the 4-hour candle, we are in the red zone, the pivot point. So that in itself, in all probability, a break below there, there'll be a high probability, not a certainty, but a high probability that if we break those two lows, trade below these two 50-minute lows, we will come back to this imbalance here. We have an imbalance here that we formed after the news, just a little bit above 162.42, which is actually a monthly high from way back in time. But that being said, the current 4-hour fib range is here. 62% levels here. So a break below this area. So that low, the final low there, 162.94. So we start to trade below 162.94. That would probably start to suggest we're moving to come down and fill this imbalance. Then we may get support down here to then move back up in line with the 4-hour trend and the day trend, which is up. Okay. All right. So that's how I look at the euro yen at the moment. Euro pound, which has been very range bound. Here's a day chart. What I've got here is that's weekly. It's a weekly low here, which may be a little bit hidden now, but it's worth knowing that it's there. It's 85.43. We really have a range though from 85.71 down to 84.98. So in my mind at the moment, with the range bound nature of the pair, is look to the top of the range to sell, look to the bottom of the range to be a buyer. So we've been down to the bottom. So at the moment, I think you should be looking for this to come up to 85.71 to 85.77. What happens here? Do we hold up here? Can you see a lower time frame trigger to trade back down the range? All right. I'm just pausing because they've been talking to me about the euro dollar. So on the day chart, Edwin, the trend, if you're using the weekly trend is down. I know you're talking about the daily. The daily trend, using, that is a lower top here. Yes, that if I use the big tops and bottoms, there's the higher bottom. It's putting a lower top here, and there's a minor bottom here that we broke, which has been then tested. So we came down. Come down, but we've actually come down to there. We had a bit of a rally there, which tested this area like so. Now the bigger swings, that's the higher bottom, so that big swing there. But this is starting to, show this kind of formation, it's starting to break down. So in my mind, the day chart's much more to the downside now. It's falling. I think it's falling down in line with the weekly trend, which is down, and this is a weekly lower top forming. Okay. All right. And that's the minor range of monitoring at the moment. Right, let's get into pound dollar. Now, pound dollar on the weekly chart is in an uptrend. That's a higher top to the last top, but we had a major false break of this high, and this high here, I'll just delete a few lines off for the moment. This high here is a monthly high. So we're kind of getting a rejection, maybe a false break of this monthly high. And of that range from high to low, we've been 1 or 2 pips short of the 79% level. So there's a very strong sniff about this that maybe we've moved down rallied, and are we maybe failing at the 79% level to actually turn over to the downside? I know that the weekly chart is up because we've moved above that high, but it wasn't there. It's like it moved above. It obviously took out a whole bunch of stops on its way above here, which we can see on the day chart. But it was one day above, taking out all the stops. There's like 2 trading days here taking stops out of all these tops. And again, like I was just showing on the Eurodollar, we've moved down. We've actually come up to there and then come down to there. So whilst that's the high bottom on big swings, that's the high top of the big swings, there's some minor swings here starting to break price down. All right, it's not able today to, this area of support here isn't holding at the moment, 127.09. So from a right perspective at the moment, if you're wanting to get short the pound, as it starts to move back down the range here, 127.09 is potentially now resistance. Broken support becomes resistance. So we're either going to pop back above that level or retest it and hold. The 4-hour trend's down. We'll drag a fib in line with the downtrend and look for a rally. That level of broken support doesn't overlap nicely within the fib tool, but there's a 4-hour area here, which is last week's low at 27.23, and that overlaps with the 62% level. So we're looking for a rally. Question would be, can we get above 27.09 back up to last week's low and 4-hour broken support at 127.23? So between 27.09 and 23 I think is the zone to look for the rally. In terms of 27.09, 127.09 being resistance, you can already see it becoming resistance intraday today. You can see it here. All right, came down to there, came up, down. It actually came back up on that candle there and then down. So this area here has started to show you that it's been becoming resistance at 27.09. So my area would, like I've just said, would be 27.09.23. Last week's low. Looks a large area, but it's not. It's not. It's only 14 pips. All right. And at the moment, it's still wanting to go down. But do you want to sell it at the bottom of the move? I don't. Today's projected low, 26.74. There's only 10 pips. So most of today's range has already been done. You'd want to look for some kind of rally. All right. So the pound yen, it's coming up to test these 2 highs. Now, long term, the trend is up. Weekly trend here is up. It is, though, historically, and it's the same on the euro yen, whilst I didn't go into that detail. On all these yen pairs, they're all at very high historical levels. And yes, they were starting to sell off a little bit. We had the budget announcement today where the market was maybe expecting the interest rate may have started to go up. But that's not the case. So we're obviously swinging back up to the upside, but we're at very high levels historically. The market knows that, or the big traders know that. Maybe they're not very good retail traders that don't know what they're doing, don't know, but the market will know that we're at very high levels. So, even on the day chart here, we haven't taken out this high yet, so we could still hold a downtrend here and put in a further lower top here. So this is really, if we can't take these highs out over the next 24 hours, I would anticipate we may well start to move back down. And a good key to watch for would be, if we start to get back below the 79% level, 190.49, that would be suggestive that, we're holding here, start to trade below 190.49, we could be moving back down this way. All right. We're obviously moving up because of the bodge today, but we're only getting moved back up, back to sell levels of the previous months of the year. And if you want to be a buyer, do you want to buy at such high price? I don't. So the question is, if I want to be a buyer, like I was saying on the Euro yen, let's just get rid of this fib. You want to see a 4-hour pullback, get your fib drawn in, look to the 62%, 79% area. All right, 190.17 down to 189.89, this area here, close to this 4-hour top. That zone there, so the zone would be here. Like the Euro yen, it's put in a nice 4-hour rejection candle, so there is, there's information. If you traded the break of the candlestick low, there's more than room to manage your trade, like I said, in the Euro yen to this top, if we start to sell down. So, to the 15-minute chart, it's a very similar thing here. If we can break 190.56, that would be suggestive that we're going to come down and fill this imbalance here. All right. And, come down to within this 4-hour range back to the 62.79% area. All right. But at the moment, do you want to buy so high up? I don't. Right now, you're saying when you reach that top, wouldn't the big boys put in the sell? I am sure the big boys have sells in this area up here. Now, when we came back up here, we didn't quite come back up to the final top. So we might be creating a double top here, but I would for sure expect that they will be sitting here. So this isn't an area where I want to buy. It's most certainly an area where I want to start to watch for a setup to sell. And the 4-hour chart is already showing you that we have traded up to pretty much equal highs here, and it's sold down. So, if this gets back up to that zone up there, maybe on a 15-minute chart, you can see a very tight reversal up there because it's clear resistance where we've been fighting at this year at the moment in February and March. All right. Now, of course, we can blow straight through, but if you see your setup, I offer a very good short trade back down because the dollar yen's right back up to its sell zone for the year as well. All right, so you can monitor it. Aussie yen, it's really struggling at 98. This is my 15-minute chart. You can see how many times it's hitting 98. And, to prove the point, the Aussie yen is at quite high levels historically. And I've been discussing, the 22 high, the 23 high that we would probably sell down from there. We did. And at the moment, weekly trend still in an uptrend. It's maybe trying to put in a higher bottom here still, but it's in an area where it's quite range bound at the moment. You see these last 2 or 3 weeks of price action here, it's very range bound. From the big swings, it's lower top, lower bottom. So like I was just saying on the pound yen, we're at 79% level here. It's not going to cost you that much. We're at 97.94 at the moment. If we can't take out this high, selling at the 79% level, putting your stop just above here, we could be failing here to move back down. All right, they've got this weekly top over here too at 97.87. All this price action is kind of getting held here. All right, so you see it's very mixed because we moved down to a lower bottom. We've obviously come up today with the bodge announcement, but it's not able to take out these highs to the left, these 4-hour highs here. There's more 4-hour highs here. There's a whole area here. Let's call it you know, there with all these highs. We've just touched that area today. So getting into that area, if we get another retest of that area, that would be a great area to watch a reversal. All right. So my thoughts on the euro, on the Aussie yen. It's rather range bound. We've traded into maybe almost the top of the range, not quite. And when you get down to the 50-minute chart, there's the figure 9,800. You can see all the failures here today at 9,800 because the Aussie dollar is selling off. So whilst the other yen pairs have been moving up strongly, Aussie dollar's been moving down very strongly. So it's been negating the move up for the Aussie yen. So this, 98 looks like a good sell. Aussie dollar. All right, last week I was discussing 66.21, this area here. After we put in that hammer, did any retest of that level, and it actually, after putting the hammer, it retested that level 4 days. Only went above it to 66.38, so only went above it 17 pips. And now we're actually moving below. If we go to my weekly chart, we're trying to move below weekly support at the moment. And as I've been saying since the start of the year, the monthly chart is down. That was a rally back end of last year. Get my other drawing tool. Down, that was a rally into the end of the year. And are we moving down? That's been my philosophy for the whole year at the moment. Hasn't been easy in the area that we're at the moment. We're actually been trading between 65 and 66 for quite a while. All right, so day charts. This is going to be the sticky area. $64.85. 6,500. Because that's where support's been coming in. Just about 20 pips below 65, buyers have been coming in. So this was where to get short up here, and now you kind of crossing your fingers, hoping that this area is going to now start to break down and continue down the range. Because once it gets down, if it doesn't, then we could be dealing with a reversal back up. So certainly be watching 6,500 to 64.85 if you're short. That would be a good target for the moment. Take profit, because if that area can't break, we may well see a bounce. Now we might just get a bounce, and even though these current 2 4-hour candles are starting to move below 65.22 and 65.11, which is weekly support, we may well move back up above those areas before we get down to here. We may well see some form of a rally. Now I might have to keep adjusting the fib, but we may see a rally back before we come right down to test these low areas. We'll have to wait and see. If it doesn't rally, really, you've missed the boat to get short at the moment. You have to look for some kind of rally if you want to get short. It doesn't make good sense to just sell the bottom of the move. You could have sold 8 hours ago if you wanted to sell. Why sell now? All right, so you have to be a bit cautious on the Aussie, because down here, every time it gets down here, it then holds to move back up. So I saw the news today with the RBA making its statement, and they're like, we don't know. We don't know if interest rates should come down or go up at the moment. So we're just staying as we are. We need more data to determine if we can move down or we need to move up. So we may not break through this area. We may hold here. So if this comes down to 64.85 and you start to see it holding down a 50-minute chart, you see a trend line break to the upside, maybe we're holding once more at 65 area to move back up to 66. All right. I would say my general bias is to the downside. And of course, we have the FOMC statement coming out on into Thursday morning. Is this high over here, 65.94? So let's call it 66 area. I would say if the FOMC statement pops this up, 66 is a good area to watch for the market to stall at, turn back down. All right. So it's not in a great area at the moment to be a seller. We can all see where price is heading, but I would be dragging my fib down and monitoring any kind of retracement. All right, into New Zealand. I'll do New Zealand dollar first before I get to the New Zealand yen, because New Zealand yen may go down if the New Zealand dollar continues to go down. Now, I've been discussing this as a double top up here on the day chart, in line with the major dominant trend from the monthly chart, which is down. The monthly trend on the New Zealand dollar is just exactly the same as I showed you on the Aussie. In fact, I can just go there just to prove the point. We're down. Rally. Are we going to be doing something like, say, long term? So that's the monthly range fib. And we have this double top here. So we're actually breaking the midpoint of the double top. So potentially the target for this double top is down here at 59.19. Now, this is coming down and breaking support here. And this support here, if we move back to the Aussie, is this support here. So then actually the New Zealand is moving down stronger than the Aussie in terms of what it's been doing over the few weeks. So back to New Zealand. So at the moment, again, you want to sell a rally. You don't want to sell into this low here at 60.38. 60.38. So we've broken this midpoint here. In a perfect world, it would be watching a rally back to that point, 60, the midpoint here. Be great if we could get a fib level overlapping as well, the 62 to 79, but that's not there at the moment. But what may happen, this may move further down so that the 62 level overlaps with your broken support, like so. This area here, if we get an overlap, that would be great. But irrespective of where we get a fib overlap, this is now broken support, expected to be resistance. Okay, on a rally back to this week. Let's see if we can get a rally back up. It's always difficult when the market just starts to melt. And if you're not already short, if you're already short, you don't really care. But if you're not short, you can quite clearly see where the trend is on the intraday charts, but you want to sell a rally. So I will be just monitoring again the fib range and looking to see where we can get a rally. But this would be a good price point to watch at 60.68. Okay. So this keeps melting down the chart. The New Zealand yen, which this is my day chart. This is a weekly high over here. So to the weekly chart, this area here. Now, are we able to hold at that level to continue this decline? And the trend on the weekly is up here. You can see it, high bottom, high top. And I'm sure we're in some kind of 62% retracement area in between 62.79 at the moment. And it's a little bit sideways here, but it's been held. Once we move below this support that formed on top of here, we have a switch. We broke below, it's become resistance. So at the moment, and we do have lower top, lower bottom still, is the general bias here until proven different. If we break above that high, will prove different, is any retest of 90.98. That's your resistance level at the moment. All right. So it may offer you on a 50-minute chart today still. Might still offer you another opportunity maybe to see this area retested. today or tomorrow, watching 1998 to 91 would be that was the area to watch today. You can see we've had a turnaround. However you want to skin it, trend line break, swing point break, proving a reversals there. But we may come back up for another test of this area. So I'd watch 1998 to 91 as the area to be, getting short at for a move back down the range. So it's hard for this to go up when the New Zealand dollar is just plowing down the chart. All right. Okay, dollar Canadian, day chart. It's getting into almost the 162 extension level here on the day chart where we've moved up, pull back. All right, so then if you're long, we're obviously coming into a bit of a sell area at the moment. So, buyers beware, I think. You don't want to be buying there. If you're long and it breaks through there, great. Other than that, I would maybe start to anticipate that we could see a slight pullback from this area. And I will look to, redrawing the fib of the day chart and have an anticipation that at some point soon we're going to at least have a 62% pullback. All right. That's if the day trend just, conforms to holding its structure. Then there's always a buy on the sell side of the market. And quite clearly we're heading up towards the sell side of the market at the moment. So just moving to the 4-hour chart. This whole area here, whatever your setup is to sell, this is where you can anticipate selling pressure coming in, because that's where it came in last time. And when it gets into there, you start to see you set up to sell. Well, maybe you want to trade down from there in the short term. All right. Going to be difficult with the FMC statement coming out early Thursday morning. This may not want to move through there, but if you're getting up here looking to short, and then the FMC statement comes out, and then press conference comes out, it's all US dollar positive. Well, it's probably going to blow through there. And of course, as well, we have the inflation figures coming out later in the evening from Canada. So until we get past the inflation figures, I wouldn't be doing anything. But the inflation figures may spike this up into this area, and it starts to hold there. Well, then can you see yourself up to sell? At least trade back down for a corrective measure against the day chart uptrends. All right, dollar franc is starting to put in a higher bottom here on the weekly chart, and it's continuing up in line with what we're seeing on the dollar index in terms of that higher bottom, higher top formation on the dollar index. So day trend, it could still stall here and hold to this range that we have. So quite clearly, today, by the end of today, if we are not above here, then you can probably start to look for your setup to sell. If we get some form of rejection here. So for our chart, just put in a nasty candle. So that in itself is telling you it doesn't want to go above these two tops. Or it's traded above the two tops, but doesn't want to be above the two tops. So, and then it's just come back up to retest. So that's last month's high over here. So that's going to be a clear, strong resistance area. So range bound at the moment, really up here is the sell zone to try and trade back down to the bottom of the range. And maybe just draw the fib across the range. There's plenty of time to think about it, but my range trade is, I'd actually put my fib on that high because that was a false break. That's more the range. Starting at the 100% level, stop at the 127 or above, and then targeting down to the bottom of the range. And I might actually put the bottom of the range to there because this was a false break. All right, so selling at the 100% level, or as close as you can, stop at the 127R, looking to trade back down to the 0 level, or 87.57 is monthly support. All right, now you want to be in. You're going to make a decision to get short. You want to be about at the 79% level so that, it starts to come down. You could take the tact of, if we get to the 79% level, I'm going to sell there. I'm going to put my stop above here just, and then I'm targeting down to here. All right. Of course, more aggressive, you could be selling here, try and get an uptick. Stop at the 127 or above. And as long as this isn't going to kick out of this range into a trend, it won't make the 127R. And you've got every opportunity. This could at least then start to pull back down into the range. All right, so is the dollar franc going to hold the range? You'd also, of course, have to look at that. If you're going to short the top of the range, you're going to have to look at that before the US news Thursday, because if the US news comes out Thursday positive from the FMC statement, we'll probably blow through the top of that range. Right, dollar yen flying up, back up to the highs of the year. Looking very strong at the moment. The market was anticipating a change, I think, from the bodge, and it never came. So yes, we could still, these are the kind of similar two highs that we just saw on the pound yen. Pound yen's looking fractionally different because the pound dollar is smoking down the chart to the south side. So it's coming up to the top, and then it may want to hold because maybe the pound's selling off slightly stronger than the dollar yen's moving up. All right. But this area here is exactly the same area here. These are the highs of the year, February, March. So yes, we could blow straight through there and come up to maybe want to test last year's high and the year before's high. But is an area where you want to buy. After the move we've had today, you should have already been long if you wanted to be on the long side, because we're coming quite clearly back into the sell zone. All right, I think the dollar versus the yen, with the FMC statement coming out where we're expecting possibly no change and maybe a hard reiteration that maybe, we're not going to cut interest rates yet. Could be, later in the year, like late in the year. That might add a bit more fuel to the dollar yen. So I would just be on my sideline at the moment, wanting to know if we come up and test these two highs, what happens? Do we reject? All right. I thought once we actually moved down through here, we probably weren't coming back up to here, but quite clearly, the markets decided it came up until today's trading started and the bodge came in. We actually just traded back up to 62% level and broken support to be resistance, which was a great technical level for the for the bodge to come out and say, hey, we want to raise interest rates, but start to make a change in stance in policy, and we would have probably then held at the 62% level and collapsed, but they haven't done that. So from what I can gather, they're buying bonds at the same rate as before, and there's no real change. So the market's anticipation of a change hasn't come. But you move to the 4-hour chart, you can see all the 4-hour highs to the left here. All right. The whole area of resistance is really there, which we're already into that area. So if we see a 4-hour candle rejection, then what is your trigger to get short? If you want to be really aggressive, if it gets up to the highest point, you could sell there with a 100 pip stop, basing on the fact that you don't think it's going to move through too much, and you want to try and sell the top of the market. All right. Of course, you're not waiting for any confirmation. You just want to sell at the clear resistance area in anticipation that it's going to hold. Or you can stand back and wait for some kind of price pattern set up to go short, okay? All right, lastly, gold, just forming, we've rushed all the way up. This is a weekly chart. Inside down week last week. It's not selling off like we did last time, where we rushed up and sold off. It's having a little bit of a pause. It is forming a little bit of a support area here. So is this a support area forming to move higher? It would be nice for the 4-hour chart to come up to a higher top, then give you a pullback. And as you start to see it form a higher bottom, that will be then the time to buy at such higher levels to see whether this can have a go and break through here. All right, so at the moment, it could break through support if it was to break this low here. Because at the moment, this area here and this area here is false breaking in this area, last week's low. So we're seeing a false break of last week's low at the moment. But if we, close below here today, close below 21.46 today, that's probably coming down to here. So it all depends what price does today. Is it holding here to start to, develop an uptrend? Or it might just go sideways here until the FMC statement comes out in any event. I think that, the thing to think about is this instrument is at such high selling levels at the moment, historically, that just a natural correction would take you back down to, a natural correction would take us back down to these highs. Like, have we now clearly taken out these 3 monthly tops? A much better ploy would be to wait for price to come back into this area, hold, and then get ready to get long for a move up and then a break above. All right, but we could be starting to form a base here to get ready to move up. So you have to watch to see if it starts to hold. Does it start to develop an uptrend on the 4-hour chart? It's not doing that at the moment. All right, I just want to put that back in so I can see what happens in my next review on Thursday. All right, looking for that kind of price action. All right, so my thoughts. That's my thoughts on the market at the moment. Of course, we're definitely seeing pairs to the yen have been moving right back up to selling levels. Are we going to see a breakout above, or are we going to see a failure? Next 2 days or so, we'll start to see what's going to occur there. And of course, pairs to the US dollar are selling off as we head towards the FOMC. So now I'll just move back to the euro. It does look very much like that keeps moving down at the moment. It looks like there was an initiation in the early part of the month where we moved up to high levels to clear out some shorts, or some weak shorts, and then once we retrace 62%, we're topping out to move back down. All right. Edwin, at the moment, I don't provide an update on support and resistance video. The video I was doing, not at the moment. But you never know, it might come back shortly. So yeah, Raina, I like to look at the structure. And like I've been showing you on the 4-hour chart and saying, waiting for a pullback. Yes, I like to, define the trends. Like with the day trends down, the 4-hour trends down here on the euro. And then I like to refine my interest on the 15-minute chart, look for a pullback, and then get in on on a 15-minute entry. Or, depending on what I'm seeing, whilst I might say it's a 50-minute chart entry, if I think this is going to continue down, if this starts to pull back on the 4-hour, often what I'll do is I'll have an order sitting here. I like the 79% levels. So if I have a 79% level overlapping with an area of resistance, I will often sell there, stop above the high, anticipating the next downward move. All right, so at the moment, I'm just monitoring four-hour retracement on a number of these pairs to see what happens on a retracement, and then what can I see to maybe get short on the 50-minute chart. All right. Okay, thanks everybody. So if you want to be with me tomorrow evening, I'll just give you a heads up. Tomorrow's webinar from me will be on pivot points. Pivot points are these things on my 50-minute charts. These lines, okay? Take you through a lesson on that. If you want to get access to my pivot points, you just need to contact Nathan. I've given you his email already. You can get access to my chart layouts and templates. So that's tomorrow evening's lesson. If you want to join me, that will be at 8 p.m. Sydney time. So if you have a time, I look forward to seeing you then. Other than that, I'll just emphasize, make sure you're aware of all the news and announcements coming out. There's lots of central bank announcements this week, so don't be just getting in the face of a central bank. Sometimes it's better just to be on the sidelines until the news is passed, and then wait for the next retracement, next rally within the trend. Okay, thanks everyone.